Hey guys, Steve here with the Anatomy of a Trade video for this week. We're going to take a quick look at a trade we placed in the strategy session on Honeywell. And this was the setup we had identified. Essentially, on the weekly chart, what was happening was Honeywell was coming up from this uptrend, and then it started to move sideways in this box, started to break out, contributed mainly from earnings. Okay, so there was an earnings move. This moved higher out of the box, out of consolidation, and on the same time it was also consolidating on the daily chart right in here. Okay, so the daily chart was consolidating and the weekly chart was consolidating, and we finally, because of the earnings move, had a breakout above this resistance area at 95.50, 95.60. Okay, so what we did was we drew our trend line in. Here was our trend line, and we entered a position. So we took whatever the price was, and our stop level was down here at 92.90. So we subtracted what was this, 96, let's say 96.90 to make it easy, mental math, to 92.90. So $4. We took whatever our max position size or our max loss size is. So, for our strategy session purposes, that's 0.75% of the account value. So we were risking about $750. Divide that by $4, and that gives you the amount of shares that you own. So that's a brief, quick and down and dirty way to get your position size. Other people use different metrics, but like I said, that's our down and dirty way. So essentially, what happened was the stock moved higher, from earnings. It continued to move higher the next few days, and then we started to get these pullback bars. Fairly substantial, nothing out of the ordinary, and we assumed that at this point we would come back and test either this 95.60 area or potentially come back and test the trend line that we had drawn in, because you would see here trend line was fairly accurate, where we had a low here, and another one here right along the trend line, and now we had the 50-day moving average coinciding with trend line support. So again, logical place to come back would be this 94.50 area, and let's see what happened. So we came back, and again we had this nice long candle right in here, this long tail, and if you haven't already, definitely check out the video from this week, the candlestick basics, and where I kind of go over the parts of a candlestick and different ways to look at them. But so this was the tail. So price at some point during the day came all the way down to this trend line, but it did close back here at 95.19. So I was feeling at that point fairly confident that this trend line was intact, gonna hold, and now we would see a resumption higher in the trend. Well, sure enough, that didn't happen. So we had a breakdown of the trend here. So our stop is still down here at 92. We never had an opportunity to move the stop higher from the time that we entered to here. So of course, if we would have been able to resume higher, we would have probably been able to move our stop up to at least this 93.40 level. But as I said, at this point we're in a significant downtrend, and we pretty much caught the top of this one. So again, here was another long wick candlestick. So it came right down to this 93.30 level, which was also this low, which was also, if you draw a line in there, it coincided with a lot of different places, right? It was the low here, it was the high here, the high here, the low here. So I said, okay, well, now we're gonna basically turn around and we should go higher. And sure enough, that didn't happen. So this was the day that our stop was triggered. So we broke this low, we had broken trend line support, we had broken the 50-day moving average. So essentially this was a false breakout that we entered into. Really no way of knowing that it was a false breakout, but like I said, we did basically only had one green day since that downtrend started. So we exited the next day at the open, which was 91.70. So unfortunately, that was much lower than our 92.90 initial stop level, and we were taken out for a 1R loss or greater. So with that said, we kind of watched the stock, and it's continued to move lower, and then finally it bounced higher. And this is kind of the reason I'm doing this video here. I want to show you what exactly happened. The reason that it bounced higher, and again, hindsight is always 20/20, but it's good to learn from mistakes, is we did identify this trend here. We also knew that we were consolidating in this box. We broke out, and then we had to move lower. Of course, the move lower was not helped by the market. The market was very weak the week that we got stopped out. But sure enough, what happened with Honeywell is it came right back down to this support level. And this support level, this $90 level, is the same level as the weekly resistance support. So now it's moving higher. So looking back, maybe our stop was too tight. Okay, a couple things that maybe we did wrong. Maybe our stop was too tight. All right, maybe when we entered here at 96, we only had our stop was at 92, so it was like 5% on the stock. We could have easily extended it to 8%, let's say, and put our stop below this $90 level and still been in the trade. Okay, but now what happens is we're still in the trade, but now we're back into consolidation. So there's a trade-off to that. Yes, you're still in the trade, but maybe this is dead money for, look at how long this went sideways. This has gone sideways from February to August. So, again, a couple different ways you could have played this. We could have set our stop at the low of consolidation. Second thing was, I've talked about it before, and maybe this was something that we should have applied here. Usually when you get a breakout from a weekly consolidation, the stock will consolidate again on the daily chart above weekly resistance. And that's maybe a better place to enter than right off of a weekly breakout. Because then at that point you're not going to get involved with a false breakout, because the stock is making a second high from the weekly breakout. So I don't know if I'm explaining that properly, but I think let me try and think of one that was a good example. All right, it took me a couple minutes, but I finally found one. Not the best example, but good enough to explain what I was talking about. So here is Expedia. This is actually the free trade that we entered on past Wednesday. So if you look at the weekly chart, right? Here's the weekly chart. Here was the breakout from the weekly chart on this bar on 7/3, which coincides with this bar right here. But look at what happened with Expedia after the breakout. You see how these 5 or 6 bars went sideways to develop this consolidation area, and then we finally broke out again from that consolidation. This was our trade. It wasn't the breakout over, let's say, 79. It was more the breakout over 82, and then we were able to set a stop here at 76, or wherever we set it, 77. So that's kind of what I'm talking about as far as maybe down the line, maybe when we get weekly breakouts, let's just put them off to the side and not trade them off a weekly breakout, and let's see if they set up a nice daily breakout in the coming weeks afterwards to really enter the trade and confirm that we're in an uptrend and not a false breakout. So a couple different things to learn from that trade in Honeywell. Like I said, hindsight is always 20/20. That was one of the trades that really kind of hit us hard the last week, with just not being able to get out for less than a 1R loss, which is really what I want to do. But you could see again how it came right back down to this $90 level and it's consolidating again. So again, it's still on the list, but I think next time if we get a breakout over this 95 area, I'd want to see some consolidation and then another breakout, and that would be our trigger to enter. So just some stuff to think about, keep in the back of your head. Again, these anatomy of a trade videos are really to take a trade from start to finish and kind of discuss if we could have done anything better, I guess. And learn from our mistakes. This way, going forward, we're better traders for it. So again, if you haven't already, please subscribe to the YouTube channel. Follow me, StockTwits, Twitter, Google+. And for those who are not social media savvy, you can also visit the website and subscribe to the nightly recap, where I will send a nightly email with the video links directly to your inbox for easy viewing. If you like this video, please hit the like button below and provide some comments if you have any questions or concerns. With that said, guys, have a great rest of the day, and we will see you tonight for the strategy session.